Hello, my name is Amarthya, and today I'm with my fellow colleagues, Mairav and Taylor. Today, we're here to introduce you an exciting equity on the New York Stock Exchange, Genie Solar Energy. Genie is a renewable energy company that specializes in providing sustainable solar solutions to commercial and residential entities. They also have extremely strong financial fundamentals as well as a good management team. Next, I want to move on to the table of contents. We'll be talking about the company overview, investment philosophy, catalysts, industry outlook, client personalization, and finally, the company evaluation. Next, let's talk about the company overview. Genie is in two different types of fields: retail energy through GRE, renewable energy through GREW. They also operate in 18 states and are looking to expand into 10 new unregulated states in the United States of America. Let's look at the market dynamics. The solar energy industry is looking to expand into 8 times growth. They also have high vertical integration for solar to improve supply chain issues. Next, let's move on to financials. The revenue of the GRE is around $353 million US. They also have a gross margin of 52.1% with a yield of 3%. Next, the EBITDA is $112 million US. And also, they have a CAGR, a compound annual growth rate, of 17.59% over a 5-year time span. Next, they also have a market cap of over $300 million US. Finally, because of all factors stated above, they are able to repurchase around 5% of the stock on the exchange, totaling to around $7.8 million, with increased values for every single shareholder, which also shows how strong their fundamentals are. Next, let's move on to investment philosophy. We believe that a value and entrepreneurial investment philosophy is necessary in finding a strong stock. Firstly, we look at the value. We first look at the fundamentals of every single company we checked. This is because we analyze the balance sheets, income, and financial and cash flows. Then, we look at the risk and the risk management of each and every company by looking at such as things as interest rates, hedging, and cash expenditures. We also look at moats because it's extremely important for value, such as competitive landscape and customer satisfaction in the business. Next, we look at the entrepreneurial aspects of the company, such as the innovation and their ability to disrupt markets and create new ones entirely, as well as their potential to grow significantly over the long-term period and make sure they have a strong business. Then finally, we look at the environmental aspect of the company and ensure the company both benefits its shareholders, but more importantly, the world and through their innovations. Next, I want to move into my colleague Mairav, who will be talking about the catalysts.
Genie has enormous macroeconomic tailwinds that are supporting its explosive growth. The United States, which is its biggest market, the government is providing a 30% investment tax credit, $128 billion US funding for renewable energy research, investment, and tax incentives. And the government is also providing $50 million US in grants to help small businesses transition to renewable energy. Genie is strongly considering expanding into emerging markets like India, apart from developed markets like the United States. This is partly due to the macroeconomic catalysts of the country. The Indian government has plans to achieve 100 gigawatt in solar power capacity and wants to establish large-scale solar power projects with a capacity of at least 500 megawatts. The government is going to support the initiatives through incentives, gap funding, and helping with land acquisition. The global community has also adopted statutes like the Paris Agreement and the Sustainable Development Goals, which emphasizes the need to transition to renewable energy. All these factors will contribute to explosive growth that Genie is about to witness. Apart from macroeconomic catalysts, Genie also has microeconomic catalysts that are fueling its rise. The biggest macroeconomic catalysts that are supporting Genie are expansion to 10 more states within the United States to get a bigger market share. The company's prudent financial management and excellent company management is highlighted by consistently increasing revenue despite the coronavirus and the global economic slowdown. The company's revenue increased by 3.35% from 2020 to 2021. The company is also considering international expansion into energy-hungry, fast-growing and developing economies like India. According to a study by Model Intelligence, the solar energy market is expected to grow by over 11% in the United States between 2019 and 2028. The industry was valued at 17.1 billion US dollars in 2019 and is predicted to grow to 43.7 billion dollars by 2028, a whopping 156% increase. This is due to the favorable government policies as specified in the catalyst section. Technological advancements in the field that are making solar energy more efficient and affordable and are increasing demand. As awareness regarding climate change and the benefits of solar energy increases, demand for solar energy is increasing exponentially. For example, the number of solar energy installations grew by 11% between 2019 and 2020, according to the Solar Energy Industry Association. Now, I shall pass on to my colleague Taylor, who will discuss the client personalization as well as the financials of the company.
We would like to go back to the three hallmarks of our investment strategy, and we would like to personalize it to our client, Fabio Lin. As you can see, there are three main points of sustainability, geographical diversification, and industrial diversification that we are prioritizing. First, our client wants a company that not only adds value economically, but also to the world. This can be done through Genie, as Genie is an ESG low-risk company, and that the company, by nature, is environmentally friendly in its business. In its geography, Fabio Lin's portfolios are largely comprised of companies in East Asia, like Tencent and Alibaba. Genie is opposite to this. Genie is based in the US and will begin growing its businesses in India. This will do a lot to diversify not only the companies in the portfolio, but also the regions that Fabio is able to take part in. And lastly, the industries that he is currently invested in is largely technology. Genie is a perfect way of moving into the retail, energy, and solar energy industry, and it's a growth company with over 200% net income growth over the year. Now we'll move on to relative valuation. We see that Genie outperforms in all financial metrics compared to its competition. In these financial metrics, net profit, price to earnings, return on equity, and cash per share, we can see that it substantially outperforms. We see in its net profit that the company not only is able to get record-breaking revenues, but is also able to convert that into real profit and real value for shareholders. We see that in its price to earnings that the company is considerably more valuable than its counterparts, as its value is not currently reached market sentiment, which on a high note is nearly 11 times what GNE's currently is. We see that the company is not only able to take in great amount of incomes, but also make them from it in the return on equity. This shows more so how the board is able to effectively utilize the assets that are at disposal of the company to increase the value of the company and its assets. And lastly, we see in the cash per share that the company's growth largely comes with little or no debt. We can see this in the astronomical cash per share compared to some of its even larger counterparts. This shows us that the company has less than single-digit debt and is also very able to invest in new industries with its heavily liquid assets. Next, I'll pass it on to Mairav, who will talk about the intrinsic valuation we've come up with the DCF method.
In the top section, we have tried to estimate the free cash flow of the company using various financial models and predictions for the next 5 fiscal years from 2023 to 2027. Using these values and using data about the company, we've calculated the WACC, which is estimated to be 7.60%. We have taken the terminal growth rate as the USA GDP growth between 2027 and 2028, which is 2%. Based on this, we've calculated a terminal value of $3,758,000,000 approximately. Then over here, we've discounted the present value, which is $143 million approximately. Then over here, we've calculated the implied share price, which we have found to be $150. Compared to the $11.98 current price, this implies an upside of 1,252%, which is phenomenal. Now we shall conclude with our presentation.
We'd like to summarize the key elements of this business in its proven cash generation through its various different arms of the company and various economic market environments. We see that portfolio management is also exceptional, where the company is able to great returns on equity compared to its counterparts and the market as a whole. We also see that the company has a strong, less than single-digit debt amount on its balance sheet, which allows the company to freely invest in new industries without being held back by previous obligations to other firms. We would like to highlight the numbers of the high cash to market cap, showing how liquid the company is and how truly valuable the company is when we look at it as a whole. We see the PE shows so much unlocked potential, where we see that it is 83% more valuable than the average, which is less so. And largely we see in the net income has been a significant year-on-year increase of over 200%, showing how the board and the company is able to move revenues into real value for shareholders like you and me. And that's why we recommend that you buy
And hold
For 20 years.